B Ashok, Chairman of IOC, joins us. Good morning, Mr. Ashok. Thank you very much for joining us. Well, first up, at the moment, what are the gains you are making on a litre of petrol and diesel?
Well, let me explain it in context. I would not be able to give you the exact figure, but I can explain to you the context. Our business is a volume business.
Yes.
The margins are not very, very high. Okay, and we make our money or our profits based on the volumes that we sell. The margins normally are very, very thin in this fuels business, so it cannot be expected to go up sharply or act in terms of percentage terms. But what's really working for the company, I can share with you. Basically, as far as our 3 quarters results are concerned, we had a huge hit in terms of our inventory valuation.
Yes.
And that's how we had to declare a loss in the 3rd quarter of almost about 1,012 crores. And of which the inventory loss itself was about 15,000 crore, close to it in crude, and about 2,000 crore in petroleum products. But what we see as a positive in the 4th quarter would be that, maybe we will not have any sort of an inventory loss. That's how it looks up. And so we hope to do better because of that, and not because of any sort of substantial increase in margins of both the key products. I am sure you're interested in petrol and diesel.
Yes.
It's not because of any huge increases in margins. Yeah.
So there won't be any inventory loss, but will there be any inventory gain, Mr. Ashok?
No, we'll have to wait and watch, because while it's been fluctuating, but it has not been fluctuating as wildly as it was, and there was a steep drop between June and January. But since then, it has been between the 50 and 58, 59. So it has been bound in that range. So hopefully we should not be losing much. I can share with you some details. In terms of what was our our Q3 average cost per barrel was about $76.
Okay.
And the Q4 is expected to be around $53 per barrel. So if during this Q4, if it is range bound in that sense, we should not be losing much money on inventory. And parallelly, what's happening is that the cracks are good, which means the difference between the international prices of the petroleum products, basically petrol and diesel, and the international prices of crude, the difference between them are a little healthy. So we think that these are the positives as far as the industry is concerned.
What are the refining margins or the cracks for the quarter?
No, the refining margins, no, we still have to wait. The quarter is not ended. So
today is the last day. You can give us a ballpark figure.
Well, what I can say is that in the March, the figures look quite healthy during the month of March. So overall for the quarter, we need to work it out. In January, it was not so healthy, but in March, it is quite healthy. So overall, we think that during the quarter, we should end up in a good term.
You will end in the black for sure, but will it be a substantial amount of black for the quarter to overcome the year's losses?
Well, the year's losses were a little too high. But then you must appreciate that while we had this inventory loss of 17,000 crore, we still declared a loss of only 1,000 crore. Which means we have made up almost 16,000 crore during the 3 quarters. So that gives you an indication of how we are moving. And in the 4th quarter, without the inventory losses, with our normal operations, and with healthy performance improvement, I can tell you that whether in terms of refinery performance or in terms of the marketing side, we have had very good performance improvements. In refinery parameters, we have had good gains in terms of yield. We have had good gains in terms of the fuel and losses, and the lower cost for the fuel which is being consumed within the refinery. So all these are tending towards showing an improved performance. And similarly, in the marketing also, we have been able to maintain our share and marginally improve on it as well. So all these show that we should be ending up in a good, reasonably good level during this quarter.
What about the under-recovery situation? Last quarter the oil marketing companies were fully compensated for under-recoveries, but in Q4, what is the overall under-recovery fall?
Let me give you a comparison. For the whole of 14-15, IOC expects to have an under recovery of slightly around 40,000 crore. I mean, slightly below 40,000 crore, and probably the industry would be having around 72,000 crore. During the first quarter, the under recovery was for IOC was on the order of about 15,500 crore. Whereas for the fourth quarter, we expect this under recovery to fall down to almost 3,000 crore. So that's the extent of fall in terms of under recovery. And as you know that we have under recoveries today only on two products, namely LPG domestic as well as on kerosene, which is domestic supply of kerosene. And in LPG also, due to the implementation of the direct benefit transfer of cash to the consumers, which has been a huge success. I think the under recoveries on account of LPG are also bound to come down sharply. So all this indicates that our fourth quarter under recoveries will be well within control, and we expect that this would be fully compensated.
Okay. I mean, if you can give us only for the quarter, what is the marketing margin on diesel and petrol?
No, as I said, I mean, we really do not calculate margins. I can only tell you that there is no major change in terms of the way that we look at our price build-up, and so the margins will continue to be what they were.
Okay. Sir, I'm just trying to get some number from you. Can you give us a number for GRM for the current quarter?
Unfortunately, Lata, no. I can't give you a number at this point of time, but as I said, March GRMs appear to be very, very healthy, but we need to really work out on the quarter as a whole.
Okay. I just wanted one update on your balance sheet as well. Last quarter your debt had declined quite a bit. Your interest cost as well had fallen from, I think, 1,040 crores to about 930 crores. Where does it stand at the end of Q4? How much do you think your debt could decline to further, and what would your interest cost run rate be?
Okay, let me address the interest cost first. Actually, thanks to the sharp fall in terms of crude oil prices, our working capital has come down sharply. In terms of our borrowings, I mean, we are hovering around the 50,000, 52,000 mark at the moment, as compared to last year's closing of almost 83,000 crore. Due to that, we have had a fairly good fall in terms of our interest costs, and we think that in terms of our interest, we should be saving something like 1,500 to 2,000 crore during the year. So that's something which has really contributed to our bottom line. The second portion of your question is, I mean, how does it see our debt? I mean, our debts are pretty well under control. In fact, as I said, because our borrowings have come down substantially, and we have also been able to pay off quite a bit of our short-term loans. So things look pretty good, and debt is well in the control.
Well, Mr. Ashok, the repeated questions on margins and prices and subsidies come because you all have stopped indicating the price build-up on your website. Why have you all done that?
No, there is no issue in terms of indicating our price build-up. I mean, as I said, that there is no change in terms of the way that we are building up the prices. But since the industry has been decontrolled, we were thinking that the price build-up was not required to be put on the website. But there is absolutely no issue in terms of our sharing these details, because the build-up remains the same.
Okay. Just one final question then from my end. We were just speaking with Bank of America Merrill Lynch a while back, 5 minutes ago, and they indicated that oil marketing companies like yours could see earnings double over the next 6 to 12 months, purely because of, the sweet spot that you're in, be it falling crude prices, be it a deregulation of diesel, etc. Do you think this is a possibility that your earnings could perhaps double over the next 12 months?
Well, certainly the year 15-16 will be the first year when we are going to see the whole year with decontrol, and accordingly we will have to see how we position ourselves in the marketplace. I'm not sure whether we will be able to double our earnings or not. I mean, that is for the banks to comment on. But at this point of time, I can only say that there are a lot of positives working for the company in terms of improved performance, increasing efficiencies, as well as the positives in terms of the falling F&L costs for the refinery operation, improvement in yields, improved throughputs, improved energy efficiencies and so on. So all these will actually turn out to be good numbers. I must also mention that we are overall focused on cost control in several ways. We are focused on a lot of implementation of a lot of pipeline projects, and as you know, the pipelines would be the cheapest mode of transportation of products. And once the volume through the pipelines increase, naturally our cost of transportation of products as well as crude would come down substantially. We are also looking forward to the commissioning of our Paradip refinery, and we think that that should be holding us in good stead in the year ahead.
All right, and then of course you're going to make a lot of gains from the LPG becoming a DBT product, a direct benefit product. Well, Mr. Ashok, the markets have liked what they heard from you, and the stock is up about 4% at this point in time. Thank you very much for joining us in this conversation.
Thank you, Lata. Thank you.